Hey everyone, welcome back. Today, we're diving into something having a huge impact on the market, Tesla's surprising third quarter earnings and what their forecast means for both the company and its customers. If you've been following Tesla, you probably know how much buzz surrounds their every move, but this time, there are a few things happening behind the scenes that might really catch your attention. Now, what's so interesting here? Well, Tesla's profits jumped by 17% in the third quarter, which is already impressive. But what really stands out is how they're planning to increase car sales by as much as 30% next year. That's right, 30%. They're not just banking on their existing cars either. We're talking about new models that are set to hit the market in the first half of 2025, which could mean big changes for anyone thinking about switching to an electric vehicle. So, today, we'll talk about what led to Tesla's massive profit increase, how they're planning to keep this momentum going, and what these new models mean for the electric car market. Stick around, because there's more to this story than just car sales. First off, Tesla managed to pull in $2.2 billion in profits from July through September, which is up from $1.9 billion during the same period last year. That's a big deal, especially considering how challenging this year has been for many automakers. But the real kicker is that a lot of this success didn't even come from selling cars. Instead, Tesla saw a huge boost in revenue from battery storage systems and services like charging. In fact, battery sales jumped by 52%, and that's really worth noting because it shows how Tesla is becoming more than just a car company. They're expanding into energy solutions, which is another big part of their growth. And speaking of profits, Tesla also earned $739 million from selling regulatory credits to other car manufacturers. These credits help other automakers meet their emissions requirements, so Tesla essentially profits from other companies needs to comply with regulations. That's a pretty smart move, and it's one of the reasons they're able to stay so profitable even when car sales aren't soaring through the roof. Now, about those car sales. You might be wondering, why did Tesla's sales slow down this year, and how are they planning to turn that around? Well, it's true that their global deliveries have been a bit lower than expected so far, with only a 6% increase in the number of cars sold in the third quarter. But Tesla's got a plan. They're preparing to release new models next year, including more affordable cars that could boost sales by 20 to 30%. And here's where things get exciting. Those new models are expected to be priced below $30,000 after subsidies. So, for those of you thinking about making the switch to an electric vehicle, Tesla might soon have an option that's easier on the wallet. But let's not forget about the Cybertruck. This futuristic truck has been a hot topic since its launch, and while it hasn't been a massive moneymaker yet, Tesla reported that it finally turned a profit in the third quarter. That's a pretty big milestone for the Cybertruck, and it suggests that Tesla's strategy with this vehicle is starting to pay off. And if you've been hearing a lot about Tesla's self-driving technology, well, you're not alone. Elon Musk has been doubling down on his belief that the future of cars is autonomous, and Tesla's working hard to make that a reality. Next year, they're planning to roll out a fully autonomous version of their driver assistance software. And here's the cool part. They're even talking about launching a ride-hailing app that would use their autonomous cars. Imagine ordering a ride and having a Tesla with no driver show up. That's the kind of future Tesla is working towards. But there's one more piece of the puzzle we need to talk about: competition. Tesla is still the leader when it comes to electric vehicle sales, but their market share has slipped a bit this year, and other companies like BYD in China are starting to catch up. Plus, with new models coming from competitors like GM and Hyundai, Tesla knows they need to stay ahead. That's probably why they're putting so much effort into launching new models and improving their energy business. It's a way to stay competitive and keep their customers excited. So, what does all this mean for you, whether you're an investor or just someone curious about electric cars? Well, Tesla's strong performance this quarter shows that they're not just resting on their laurels. They're continuing to innovate and diversify, which is crucial in an industry that's growing as fast as the electric vehicle market. Whether it's through new, more affordable models, expanding into energy storage, or pushing the boundaries of autonomous driving, Tesla is positioning itself to stay at the forefront of this movement. And so, Tesla's latest earnings and their sales forecast have shown us that the company is still full of surprises, and there's a lot to look forward to next year. So, what do you think? Do you see Tesla's new models making a big splash? Let me know in the comments. I'd love to hear your thoughts. Thanks for tuning in today, and make sure to subscribe for more insights on investing, personal finance tips, and strategies to help you reach your financial goals. Take care, and I'll catch you in the next one.